Good evening, ladies and gentlemen. Today is Friday. It is the 23rd of July, and hell of a day. It was a ball, and basically, we opened gap up, positive sentiment. Saw the biggest red candle on a 5 minute time frame that I've seen in a very, very long time, many months. Completely knocked off 100 points, just like that. I think Bank Nifty fell 500 points and whatnot. That would have been fine. I was able to manage that, rolling down the calls and whatnot, and then the dip started getting bought. And unlike how recently, whenever we dipped, the dip has got bought to some extent. We got bought with a lot of vigor. The longest time I was a little confused. There wasn't much call unwinding going on. So it was a time bomb that was setting up the entire time, I guess. And it led to this big short covering move that happened in multiple spurts. I tried to manage it. I don't know. Maybe it was just because of the psychology that set in after seeing the morning red candle and the way puts exploded. I didn't necessarily want to take in additional put side credit. I just rolled off my calls, taking risk off on my calls at different points. And it's good that I did that. I would have got burned severely if I didn't. But we continued to move up with this expansion on the call side, which really wasn't compensated by put side decay either. It's not like puts for giving up a lot of value. At some point, I decided I set a hard stop for myself, and I didn't want to take anything more than 1% of a loss. So I said, okay, that's where I'm going to exit, and that's what I did. Probably not at the best point in the day, but I mean, I can look back and be like, oh, had I held the position, it would have done X, but it could have also continued to burn because with short covering, it's completely possible. It's a very low probability, but completely possible that we get pulled all the way to 16,000 today. It's completely possible. It's not impossible, right? It's probability is low, improbable, but highly possible. Anyway, so all that said, decided to take the exit. So I hope you guys have a great weekend, and I will catch you on Monday. I hope you didn't get stuck in any of the short covering because I mean, short covering is fine, but today the way it played out, especially in given pricing environment, was to say the least very amusing. Thank you so much. Have a great weekend.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So turns out my mic was not selected, and there's no audio in any of the first clips. But I'll just go over what has happened. Today has been a very interesting day. We were opening here, gap up with some strength, and my idea was more or less that the recent high should be a resistance, and yesterday's low that should act as a support zone. And it's been quite a ride. We had I initially had entered with the 15,700 put option partly and 15,650 put option partly, and sold the 16,000 call. There was some kind of a big sell-off, either triggered by one of three reasons: either a mis-executed order, somebody placed an order that they didn't intend to, because nobody, even if you want to sell, you don't sell like that. You kill the liquidity for yourself, and you get a very bad pricing on your exit. So why would you do that? Or somebody like which way, like somebody might have sold and then had to buy it all back, or despite the maybe somebody just wanted to create a shakeout. I don't know, big sell off in the morning, expanding the 15,700 puts to 50 plus, and then a complete buyback. Now, unfortunately, the nature of how this works is on the down move, I had to quickly risk off on my puts. I had to square up to 15,700, move it to 15,650, all of it. Also roll down my calls from 16,000 to 16,950, and then to 15,000 to 15,950, and then 15,900. On the reversal, the 15,900 started to expand quite a bit. So I had to get out of the 15,900 because it was quite a quick reversal. And just as I speak, we are now heading to the day's high, right? So yeah, so I had to square that off and move back up. My risk tolerance for the day, I mean, I'd kept my position sizing half as it is, so that's fine. My risk tolerance for the day is probably, I mean, given the IV spike, is about, I would say not more than 1% of my capital. So if I remember losing 1% on the trade, then I'll just take the exit. I don't want to take the exit at the IV spike, right? So it's still in a relatively high IV, which should cool off in case we have a mum day from here. I don't want to take an exit at that point, so which is why I'm trailing my stop loss by about 4 points. So at a mark to market of 3 lakhs is where I will exit. And yeah, very interesting move in the first one. The time is 10:15. I'll do something now to set up a clock so that it's visible here. Okay, so now we should have date time. And yeah, it's been like a day, which I guess isn't so bad. It's just that the initial down move, which led to a very big expansion on the puts and a massive fall off on the calls. So we basically got burnt on the calls on the reversal. Major headache, if any, was these calls having to roll to them at a very bad price and then getting burnt on the reversal. So that was definitely the headache. Now, as far as these down moves are concerned, they're not really affecting people. So after this dip got bought the way it did, people are not so convinced to pay larger amounts uh, for put options like this. At that point, there would have been massive unwinding as well as a lot of speculative put option buys. The moment that didn't work out now until this, we're testing this or breaking this, there won't be too much expansion on the put side. So yeah, for now, I'm quite comfortable and just once again trailing stop loss. So it's just one of those days where the initial move was quite drastic. Okay, the time is 12:15. We're almost at the halfway mark. There's a little bit of expansion that was taking place on these calls, but the way I see it, there is after the dip got bought, we dipped again, got rejected from 15,850, again got bought, and again after testing here. So this can go either way, and I think it's higher probability that we consolidate here than to have some big short covering. Of course, it is very much possible, but the reasoning for that is a lot of positions around 15,800 and more building up around 15,800. 15,800 is roughly pricing in. The call option is pricing in about 100 points of risk. So that being the case, I would not want to be too quick in squaring off these calls and rolling them to 16,000, which will not really protect me in case once again there's a dip and these expand. So little bit and even into the rise while this call is rising, this put is not giving up much value, mostly because you need confirmation of that. You need confirmation that we're going to break 15,850 and head higher. At that point, these puts will start losing. So just when these calls expand and these puts have not given up, once again, an IV spike, you don't want to do any adjustments. Yeah, and keep you posted. We're halfway through the day and currently close to 5 points down on this current sizing, but very much in a manageable position. I think for now, I'm just going to keep this as is. I need there to be a short covering triggered and just to expand around 34, 35, at which point I'll get out of it and short the 16,000. Okay, tried to hold on to the 15,950 calls for as long as possible, but it's reached 35 and beyond that, I mean, look, here's where we are. We got bought completely and now we're testing the day's high. And if there's some short covering from here, it can be quite bad because if you see there are a lot of calls written 57 lakh at 15,800 and there are a lot of calls at 15,850, 15,900, all these calls. So there's a higher probability that we sort of reject the higher levels. But at the same time, if we don't, then there can be some kind of mad expansion. And I don't want to sit through that kind of an expansion. And yeah, at this point, I have a good 350 points. My calls are 130 points away. The 16,000 call will probably be not covered to the extent, at least as the lower levels, because most people who are squaring off lower level calls will be selling higher level calls. So that's what I am working with. I have no intention to take credit from the 15,700 put. So the only option is to roll away to 16,000. And that's what I've done. And at this point, I am more or less trailing a 2 point stop loss. So it's a very tight stop loss, but there really isn't that much time left to go. The time is 1 o'clock. So 2.5 hours, roughly 2 points is what I'm trailing. There is still a good amount of value in the put options. So that is, if we hold these levels, the put options will fall off quite a bit. That's what I'm working with. Yeah, as soon as this tested 35, it just didn't make sense anymore. See, the thing is, this is a high intensity zone. From here, you reject, and then the calls will lose good amount of value. But if you break out, then the calls will gain a lot. So I just don't want to sit on something that is relatively high intensity. By spacing myself further, by just moving away the calls, I've sort of ensured that if there is some kind of big short covering, I will not be too affected by it. Yeah, I mean, Bank Nifty continues to head higher and continues to take Nifty higher with it. And what I'm looking at is the 15800 call is not really seeing unwinding. Yes, there's been aggressive writing of 15800 put. 15900 put, not really seeing that much action. Yes, it has gone up in open interest, but probably to cover short positions a little bit. And no unwinding as such. No unwinding in the 15800 call. That's interesting. And yeah, I mean, that's more or less what is a little bit concerning, because like it just means that either there are already enough long positions in the system because of the shorts that have been taken on the put options, that there won't be some big trigger and leading to a short covering. But regardless, I mean, if you look at it, right, this put actually opened at 25. And this call opened at some 25, 26. So the spread really hasn't lost much. Like even from open, I mean, forgetting all the moves in between, the spread hasn't lost much at all. And that's because, yeah, market is in a little bit of a dilemma with respect to what happens here. So, but now I think the way this position is spaced, it's fine. I should be able to, if nothing else, probably get 2, 3, 4 points of decay by the time we close, which is another 2 hours from now. And that's why I'm still in this trade. I'm trailing this 2 point stop loss that I've had for a while. So yeah, interesting situation, but no unwinding of call options, which are in the money for a long while. I mean, that's been the case all day, but even now, not really seeing much of the just writing of the 15800 put option. Okay, so my trailing stop loss hit, and the weekly options IV is like continuing to rise, especially on the call side, because the calls are expanding, the puts are really not giving up that much more. And I didn't take in 15700 put credit earlier, and even if I had taken it earlier, I don't think it would have made too much difference, because the puts really have not given up that much value versus what the calls are gaining. I guess in the current pricing environment, fact that we had like a 50-point up move in the morning from yesterday's close, from there, a 100-point sell off, which got bought with some volatility, and then this steady up move, whatnot. It is definitely a little bit difficult to manage. I did exit at the worst possible time. Like more or less, I'm convinced. I did exit at the worst possible time into the IV spike just as the panic began. But the problem is my trading stop loss, what I had decided as a hard stop for the day, has been hit, and there's no point in trying to stick to the position beyond that. Now, the same position can lose 5 points or 10 points from here, or might gain another 10. It doesn't particularly matter to me too much. I'll not be thinking about that. But yeah, one of those days which was tricky. Like in this pricing environment, such a day is always difficult to handle. So yeah, that's about it. And I hope you have a great weekend, and I will catch you on Monday. Have a great weekend and take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.